Pound sterling struggles against US dollar ahead of US data-packed session. US dollar or yen clings to gains near 149 rands ahead of US initial jobless claims data. Euro US dollar consolidates losses in cautious markets with US GDP on focus.
South African producer price inflation hits one-year high.
US dollar Canadian dollar remains steady near 1.3900 with US GDP data on focus. Australian dollar US dollar wobbles around 0.6600 ahead of key US data release.
Pi network price forecast. PI holds steady, defying the broader crypto market downtrend. Supports and resistances are primary concepts of technical analysis. S&P 500 is heading for an important price of 6,252,24402. Read about what this could mean for the future. Important resistance line being approached by BRN0 US dollar. This price has been tested numerous times in the last 3 days. FTSE 100 down 0.4%. At noon, Convatec declined sharply.
Brazil mid-month inflation below forecasts 0.51% in September. Actual 0.48%. Crypto today. Bitcoin, Ethereum, XRP extend decline amid weakening technical outlook.
Aster price forecast, Aster plummets 10%, but whales remain unfazed.
Brazil mid-month inflation below forecasts 0.51% in September. Actual 0.48%. Crypto today. Bitcoin, Ethereum, XRP extend decline amid weakening technical outlook.
Pound sterling struggles against US dollar ahead of US data-packed session. US dollar odds yen clings to gains near 149 rands ahead of US initial jobless claims data. Euro US dollar consolidates losses in cautious markets with US GDP on focus.
South African producer price inflation hits one-year high.
US dollar Canadian dollar remains steady near 1.3900 with US GDP data on focus. Australian dollar US dollar wobbles around 0.6600 ahead of key US data release.
Pi network price forecast. PI holds steady, defying the broader crypto market downtrend.
All right, good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis and watch initial jobless claims and watch trade balance and watch GDP and watch durable goods. Trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! All right, so good morning. My name is Wayne McDonald. Welcome to my office. Hey, if you look at the chat in YouTube, there's a poll. What will GDP be today? Will it be high, low, somewhere in the middle? What are your thoughts? We're about 11 minutes away. And again, we have claims and trade balance on the good side. We have GDP. We have durable goods. Holy smokes. And then tomorrow we have our PCE. So let's take a look at some of this data. Let's go to the fundamental section of TRADARS. By the way, today we're using TRADARS as an analytical platform and Trader's Way for our technical analysis and our trade execution. So we can go to the fundies, and we can look at GDP. Cool. And we're way up there at 3.3. We've been smoking hot to go, HOTTOGO. So that's why I'm like, hey, are we going to still keep printing 3? Or are we going to be dropping down to more like a 2Z? A 2Z something, huh? 2? 2.5? Less than 2? I don't know. What are your thoughts? Not so long ago, we were down here, and then suddenly we're up here. Can we maintain 3? but that's a good question. Also, tomorrow we're dealing with inflation. Now, it's not CPI, it's PCE. But, is it possible that we're maintaining a high level of inflation relative to normal? And what would it mean if we had higher than normal inflation and something as simple as normal GDP? Well, then that would lead to a potential trade, wouldn't it? Something will benefit if inflation's higher than productivity. That means the standard of living is falling. So you got to think about that. So today and tomorrow is important. What would you do if the standard of living was falling? You could still make money. And in fact, I highly recommend making more money in a scenario like that. Yeah. So anywho, that's kind of where we are. We got claims. We're super sensitive to employment right now, aren't we? So that's coming out in a few minutes. And our average right now is 230. We're expecting about 230. We were printing 264, which would get the Fed to cut. So an upward trajectory. Sounds weird. But an upward slope would allow the Fed to cut and cut more. And we have a lot of Fed speak this week, and we have a bunch of them today, and Mirren is speaking again. And so a scenario like this rising high, like 260, anywhere near that 260 level, because our average is 230, so 260 is well above average. Well, that would allow the Fed to cut more or faster or something. But we're right back to where we were. So was this a glitch in the matrix? Maybe. Okay. Cool, right? Yep, 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 yep. So did you answer the poll? Are you afraid? Why are you so scared? Looks like we're leaning to pretty hot GDP based on your poll. GDP now predicts 3.3. What do you mean by that? GDP is 3. Oh, GDP now, meaning Atlanta Fed, predicts 3.3 again? Really? Atlanta Fed. Yeah, remember they have completely different math as well. So don't overdo it and say one will predict the other, but it is what it is, right? So that's what you're offering. You're like, hey, well, that's what they're predicting. Okay. How was my week? I worked 17 and a half hours yesterday. Loving it, man. Loving it. So there's your GDP now, huh? Well, that's quite a range. Uh, Look at that. Just whoa, whoa, whoa. So, yeah, up in here. Well, yeah. So we're sitting on our 3.3 now. So I don't know how much of a prediction that is versus what we already have. But anyways, let's zip over and get ready for the news. Gold prices remain near record levels ahead of key U.S. data. Gold steadies near $3,650 as markets eye U.S. data and Fed commentary.
Fed's Moran, no material evidence of tariff-driven inflation.
Pi network price forecast, PI consolidates as CX's balances decline. Oil pulls back from 7-week high. Aster price forecast, Aster plummets 10%, but whales remain unfazed.
Eurozone bank lending growth rises in August. Brazil mid-month inflation below forecasts 0.51% in September. Actual 0.48%. Crypto Today, Bitcoin, Ethereum, XRP extend decline amid weakening technical outlook.
Pound sterling struggles against US dollar ahead of US data-packed session.
Well, you only have 3 minutes left to participate in the poll. So continuing claims, 235, which we know is slightly above average, but nowhere near the 265 we got a couple of weeks ago. 4-week average is actually, because of that, pulled up significantly high to 243. But that's because we got that big 267 in there. Trade balance, we want a negative number. Bigger the better, and that would be risk or honor, and that would also be dollar weaker. GDP, okay, there's the 3.3. That's what we have, right, for our last major print. Okay, but these are all adjustments, right? So anyways, GDP can get confusing that way. But anyways, a 3.3, right? And thank you to Richard for pointing that out, for paying attention to Fed Now on the Atlanta, or GDP Now on the Atlanta Fed database. And so magically 3.3. Now, I'm going to end the poll now. You had time. And 44%, 45% expect less than expected. Okay. So you might be right, but I hope when you answered the poll, you used some level of data and not just a straight up guess or how you feel. I liked Richard's answer, actually. Like, hey, well, if you look at GDP now, it's 3.3. Cool. Versus, Richard, how do you feel about GDP in the United States? Oh, well, it feels great. Right? So anyways, Richard, good answer. All right, 30 seconds, y'all. All y'all, 30 seconds. Durables are too volatile. Don't worry about that. That's not the biggest deal. Claims will be interesting, and GDP will be important. We want a high claims and a low GDP if you want Fed cuts. 5, 4, 3, 2, 1. Yeah. All right, let's get some numbers. Oh, a bad trade balance. Claims, good enough. Good enough. Yeah. Yeah, good enough. Wait, no, the 4-week average. No, the week over. Oh, it's bad because it's good. Oh no. What do we got here? 3.8 on the GDP. Shut the back door. See, the problem is that all of this says you don't need to cut interest rates. Oh, dang it. This is terrible. The news is great. Except for trade balance. People are going to blame tariffs. Yeah. Dury's down, let's say month over month, up. Wow. Yeah. You want to look at charts? What do you want to look at? Okay. So stock market down, dollar up. Pretty basic stuff here. Yeah, pretty basic stuff, Carmen. Let's take a look at the reaction. Let's check our indices. United States wholesale inventories below forecast, 0.1% in August. Actual 0.2%. United States continuing jobless claims came in at 1.926 IMSI below forecasts. 1.93 matters in September 12th. United States durable goods orders ex-defense, 1.9% August versus 2.5%.
United States durable goods orders ex-transportation above forecasts, 0% in August. Actual, 0.4%.
So there's the reaction that makes tons of sense. Less cuts means we have to price out the cuts we priced in. The cuts we priced in weakened the dollar. So now the dollar should strengthen as we price them out. And it's not necessarily bulls buying, it's bears getting out. Yeah. Kitty cat benefiting. Okay. So euro dollar longs are being unwound. Yeah, US, right? US against Canada being unwound. So dollar should destroy pretty much everything on the short run. Yeah, pretty interesting. Let's take a look at some of these pivots. And of course, I'm sort of a risk on guy, and all of that's going to be destroyed with data like this because the market was very much irrationally exuberant on the number of cuts. 3 this year and maybe 3 or more next year. And I'm like, really? I think at best, this was the opinion back in January, that September and December are on the table and October is not. So this takes dollar, right? This takes October off the table. Now, tomorrow, PCE being high will also contribute to this. Okay, so that pig really coming down. That's a game changer here. It's a big deal. Yeah, and remember, these moves here are coming off projected tops. It's not random. projected tops. Okay, so euro dollar, also not random. That's the projected high for the year. Back in January, we said our absolute best case scenario for euro dollar is this vertical price. So now we have double and even triple topped on that price. So not only did we get the exact price, we got it exactly on Canada Day, which is the day we expect to peak. Then we expect this trading volume and volatility to pick up, which it seems to have done, but it's respected that top line again. And wow, it's incredibly important. Yeah. Yeah. Yen. Got our breakout here, huh? Looks like we're moving. So we have to eyeball a new top at 150 and new supportive zone. Oops. Okay. Okay. That's probably how I'd look at it. So now we're up into a new range. This was important. Like Kiwi's not a good currency right now. We know that. And one of the things we played around with months ago, in fact, was with this, because back a few months ago, it looked like New Zealand was improving. So we had this higher high, higher low role reversal idea. We tried it and it worked, and we retested it, and it was a giant maybe. It still could be a maybe. Okay. It's not necessarily over yet. But that news that just came out is a big deal. If we are pricing out even just one Fed cut that was priced in, that's dollar strength. And Kiwi's already a dog with fleas. A lot of this was predicated on the idea that the Fed would cut a lot and it would be risk on.
U.S. durable goods orders rise 2.9% in August versus 0.5% expected.
U.S. initial jobless claims dropped to 218K last week. Jobless claims fall to lowest level since mid-July, easing concern over labor market. So it's a big deal, is all I'm saying. It's a big fundamental deal. Interesting. Is that right? Yeah. Yeah, that's going to impact gold. I mean, strong dollar, big GDP. So let's do the opposite of what I was talking about earlier. What if GDP is high and PCE is low? You don't need to hedge with gold. Yeah, well, that makes sense, Richard. That would be the standard operating procedure. Yep, that would be the basic response. How are the yen pairs taking it? Okay. Little bit of volley. Little bit of volley. Okay. Adjustment stop. Yeah, yeah. Indeed. Do, 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 do. Do, 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 do. Do, do, do. Yeah, just eyeballing things. How is the yen itself reacting? Of course, you get a clearer picture when you look at longer term charts, and uh, and again, you're not just looking at one particular yen. This is yen versus everything, and it's pretty weak. It was predicted to be weak based on seasonality, but now my yen index also predicts weakness, or not predicts, shows weakness. Right? What are you going to buy that? Sky Killer says risk off overnight. Yeah. I mean, yeah. I think that's an exaggeration, but it's not untrue. It's more like, why be risk on when you have a big risk event? And now we got the risk event, and now people are like, ugh, now it would be risk on. Yeah. So we've gone from not risk on, I think is how I describe it, to now risk on. And once again, it's a fundamental decision. Yeah. Yeah. All right. So Kiwi week. Yep. Pound week. Yep. Aussie actually fairly stable, even though it's been trying to recover. It's got its ups and downs. So we're not ready to kind of believe, right? But whatever, it is what it is. Euro being, uh, you know, has been good for a while. I wonder if the strong dollar will take the euro down, or euro and dollar could be relatively strong in general. So this is euro index, right? So despite dollar strength, maybe it remains bullish, right? Euro CAD, euro pound, euro Kiwi, euro Aussie, euro Swissy, euro yen. Okay, euro CAD maybe. Okay. It's going to really hurt the exotics. And Mexico cut interest rates. So that could be a double whammy where peso is less attractive and dollar is more attractive. And this is just straight up going the wrong way now, huh? For your carry trades. Yeah, so now we have to pay attention. Is this going to be a role reversal or a reversal? Right? Maybe Sky Killer. Maybe. So what I mean by this is, okay, a role reversal means a resumption of trend, and we're just simply, okay, doing this back to resistance, and then we resume. Okay, but then there's a straight up reversal where it goes higher, high, higher, low, higher, high. So we don't know, but it makes sense. The way it's behaving makes sense. Okay, Mexico cut interest rates. The United States cut interest rates. However, we are now pricing in one less cut, which means we're pricing in a raise.
U.S. durable goods orders rise 2.9% in August versus your 0.5% expected.
U.S. initial jobless claims dropped to 218K last week. Jobless claims fall to lowest level since mid-July, easing concern over labor market. United States wholesale inventories below forecast, 0.1% in August, actual 0.2%. United States continuing jobless claims came in at 1.926 IMSI below forecasts, 1.93 matters in September 12th. United States durable goods orders ex-defense, 1.9% August versus 2.5%.
United States durable goods orders ex-transportation above forecasts, 0% in August. Actual, 0.4%.
Fed's Miran, no material evidence of tariff-driven inflation. Gold prices remain near record levels ahead of key U.S. data. Gold steadies near $3,650 as markets eye U.S. data and Fed commentary. Yeah, so I guess the wrap-up is that's devastating to those that figured the Fed was going to cut fast and furiously. Doesn't seem to be the case. Okay. And tomorrow, high PCE would also diminish the likelihood of the Fed cutting. So it's a big whap, whap, whap to the risk-on world. You can see a lot of these trade plans based on risk-on and Fed cuts have just been, have just evaporated. Look at these lower lows. Look at this one. Whoa. And at key levels too. So like this euro dollar at the annual R3, if you look at pound dollar in its annual projected target zone. So, this move down, I mean, the logic makes sense. The timing is impeccable and the price is precise. So all of that is devastating for those that want more up, more risk on. Well, the good news is, guess what? The economy isn't collapsing. The bad news is, guess what? There's no need to cut interest rates. But to be fair, I still think they could. I think they should pause based on this information. Pause in October, which I said in January. Remember, I said cut September, pause October, cut in December. So that puts kind of my plan back on the table, because it's not like they're cutting interest rates to save our collapsing economy, but at least normalizing it. And that would help certain levels of inflation, like maybe the real estate market, maybe the insurance market, and all that kind of stuff. It might make the U.S. debt cheaper to service, and so we're normalizing, not saving, saving, but not stimulating the economy. We're just not holding it back. And so pausing in October gives us some time, and maybe we can fix this crazy GDP, because as who said it? Maybe it was Sky Killer. Might have been Richard. That maybe it's just the fact that imports are down, right? And stuff like that. But yeah, maybe. So the thing is, it is what it is. And it doesn't scream, oh my God, save us, Fed, save us. So for everyone that made those bets, they have to unbet. That means if they were selling dollar 2 weeks ago, now they have to buy it back to get out of their losing position. And it looks like they're buying, but it might just be bears exiting short covering. So it'll be very interesting in the next week or two, track the commitment of traders report and find out what is actually happening. Is it buyers buying or sellers buying? Hey man, it matters. Peace on earth, may the pips be with you.